Hey guys, welcome back to Upside Down Data. This is a quick update about the current state of the UDPI risk indicators for Bitcoin, Ethereum, and the 14 altcoins that we're currently monitoring. That number is growing every week. We're adding new assets. If there are any assets that you don't see up here yet that you would like to see us analyze, leave us a comment down below and we'll see if we can add that in the near future. So the UDPI stands for Upside Downside Potential Indicator. It's our in-house risk indicator we developed here on the channel. That's the name of the channel, Upside Down Data. That's where it comes from. And we started the channel to share all this information with you guys. The first thing that I want to emphasize here when we're looking at these risk indicators is that we can see that overall, the market does not look relatively overheated. It does not look very overheated, does not look very risky right now if we're just looking across multiple assets. Obviously, Bitcoin is the leader of the market and its risk is sitting at 1.29, which is above the midpoint, which means that it's not especially low risk right now, but it's also not especially high risk. That's important to understand because it means that there's no necessity for a pullback. It's not like things are looking especially risky right now and we should be worried. And in fact, there's lots of other evidence in the market that we are still in a bull market, that there's plenty of room to the upside, plenty of growth potential for the market as a whole. And so that's important context for understanding these individual risk indicators for specific assets. Because if you believed that we were in a bear market right now, then probably nothing that you would see on the screen would be telling you to buy. In a bear market, you'd be looking for much lower risk levels because you'd be expecting the price to continue to drop. Our expectation now for the macro is that we're still in a bull market. The market is still trending up. And therefore, we're not super likely to see, -5, let's say, a max low risk reading on these risk gauges right now because the market is trending up. So we're not waiting for those kinds of risk levels before we think that it would make sense to buy or hold an asset. Instead, we're expecting that things are still trending up for now, and we're looking for the opportunities that present themselves within specific assets. And so that's why it's really useful to compare, especially in a bull market, a situation like now, to compare risk indicators for multiple assets, because then you can see, compared to each other, which ones are likely to outperform or which ones might need to pull back or consolidate a little bit. And so when we glance across these, what we're trying to do is identify the ones that have their needles pointed to the left, because when the needle is pointed to the left, that means that it's a relatively favorable risk reward ratio. It means there's more upside potential than downside potential. We've been talking about 4 assets that that's true of. We've been talking about ADA and XRP, as well as HBAR and Algorand over the last few videos. So if you've been following along, you know that those have been some that we've been watching. Now, over the last few days, HBAR and Algorand have actually started to pick things up a bit, and their risk has come back toward the midpoint because their price has seen a bounce. Now, we're not especially surprised by that because we saw that the risk was low on both of those assets and that it had started to show signs of a reversal. In our video the other day, we pointed that out. And since then, that's played out a bit. HBAR and Algorand have both bounced in terms of price. On the other hand, ADA and XRP have not yet. They're still sitting in pretty low risk territory, but have not shown signs of a reversal. So those two are still in the let's keep an eye on them category. But we're not ready to say that those are about to bounce. There's no sign on the chart that those are about to bounce. And yet they're still relatively low risk propositions relative to lots of the others. The highest risk one on this chart we've been talking a lot about is DOT. DOT had a big run up when the parachain auctions were announced a few weeks ago. And although the price has come down a little bit since then, it hasn't come down enough or taken enough time to consolidate that the risk can come down from its still pretty elevated level at 3.08. Now, that doesn't mean that DOT can't continue to the upside. It can. 3.08 is not the scale maximum. It could keep going. It could run all the way up to 5. But it's important to understand that when you're looking at a 3.08 and there are lots of other options that are much lower risk, well, there's no reason really to be preferring Polkadot to something that's much lower risk, like HBAR or ADA or what have you. So that's why it's important to use multiple risk indicators, because you can help it can help you prioritize between multiple choices that you might have at any given point in time. So those are the ones that we've been talking about. There's a new one that I want to put on your radar today, though, and that's part of why I wanted to make this video right now, uh, is to point out that things have been changing a little bit in the world of atom or cosmos. You see over there on the left in the middle, atom has been coming down. Its risk was very high a few weeks ago, but it's been coming down rather quickly, and it's becoming more and more interesting as a result. So we're starting to think that atom might be setting up for an entry, and it might be getting to a point where it's likely to outperform lots of other assets. Let's zoom in on that a little bit, and you can see what I mean. So here we're looking at the price chart of atom from about June. And we see that the price bottomed and then went on a pretty massive run, 468%, nearly a 6x, pretty impressive run in just a few months. And it topped out in the middle of September, and the price has been consolidating ever since. It's been going more or less sideways. I've overlaid here the UDPI of the last 30 days, right next to the last 30 days of price action. So you can see what's been going on there. Price has been going more or less sideways, trending down a little bit. But as it's been doing that, the risk has been decreasing pretty substantially. And it recently crossed the midpoint over into negative territory, which means that for the first time in a while for atom, there's now more upside potential than downside potential. It's not reversing yet. We don't see on the UDPI that it's starting to trend upwards yet, but we do see that the risk has come way down, and that makes it a more appealing hold or buy. This is not financial advice, of course. Do your own research, but this is a suggestion that atom is one to watch, guys. Atom could do well. So we're going to continue to monitor atom, and we'll keep you updated on it. We might do a deeper dive into atom and the UDPI in the near future, but want to put it on your radar for now. So that's where things stand, guys. Remember to subscribe to the channel, turn on your notifications so you get this information in a timely manner. This is often going to be timely information about risk that's changing. So you'll want to get that in a timely way. Give the video a like. It helps with the YouTube algorithm, helps us reach more people. And lastly, follow us on Twitter at Upside Down Data. We put out regular updates about all this information there as well. Remember, with the UDPI, we're all going to make it.